In this video, I want to talk about the current state of the market. Should you be optimistic? Should you be pessimistic? Should you have a little bit of caution in this market that is getting elevated, expensive at the moment? What are the kind of opportunities you have to look for? What are the dangers of investing right now in the US economy? What are the stocks to completely avoid? We will talk about plenty of topics today. I will show you some tweets. I will show you some websites. It will be a dense video, pretty interesting to you if you want to know what are the opportunities at current levels. And if this is your first video from this channel, welcome. My name is Christophe Nour. I've been investing in the stock market for almost a decade now, and I have achieved a performance of 25% per year investing in quality stocks. So I have seen this scenario happen in 2021 when everything was going up and to the right. And again, for some quarters, sometimes you have hype that is coming in this market. And I saw this tweet. I recently saw this tweet from Wasteland Capital. By the way, it's a great X account, a great Twitter account. Today's winning stock. You have Lucid, you have this one plus 20%, plus 20%, plus 20%. We are back in 2021. This is what he says, except mortgage rates are 7%. And we've seen this scenario happen in the past. Let me start with the first one. You have Lucid Group. So this is a company about EVs. And now the stock is going up massively, like breaking a resistance level. But if you take a long-term view to this business, you will see that this is a stock with a 99% drawdown. So in the short term, you see that it can be a bullish sign. But if you look at the very long term, this is very bad, quite bad. Anyone that invested in this business lost money. And there is a simple reason why. You can go to Guru Focus, for example, and see the fundamentals of this business. You look at Lucid Group, technology and automotive company. It develops the next generation of EV technologies. Very well, you look at the revenue, you look at the earnings, and what you can see is this company has never been profitable. This company has never generated any free cash flow. Look at this, it's negative. This is a company that is burning cash every year. You don't have a lot of efficiency. Investing in the EV industry is very, very tricky. It's very hard to be profitable in this industry. But for some reason, the stock is up. For some news, maybe some piece of news, that new data that came in, and people like the stock. And I have already received some messages from subscribers, comments, and I've seen some videos on YouTube about Lucid, the next opportunity. You don't have to miss out of this big opportunity. But I would advise people to look at the real fundamentals of this business. Next one on the list here of the tweet is this one, B-Relay Financial. I don't know this company at all, but you see this clear bullish momentum that is happening. If you look at the long term, this company has just destroyed value for their shareholders. So again, a little bit of caution for you watching this video. If you are being forced to buy something, if you are enticed to buy something, please be extremely careful. Look at the long term, look at the fundamentals. Same thing for quantum stocks. With a bullish signal here, they are getting up, going up and up and up and up. If you look at the long term, you see that this is not the first time it happens. Two scenarios can happen. Either this is the start of a new bull market, market, and it can go up from there like a 10x. So it's only the beginning. Or it's already too late and it will crash. This is not the first time we have fake rallies like this. In July 2024, we had the same kind of momentum, but now it's getting bigger. So we will see. Nobody knows actually if this momentum will continue, but I will know for sure that I will not invest in this kind of companies. Same thing here. You have Galaxy Digital Holding up and to the right. But if you look at the long-term holding, you don't have the same chart actually. These are companies that are losing money every year, not profitable at all. You have IPOs that are now coming like Webull. You have a lot of hype and then the momentum fades away. This is not the first time it happens. So maybe on YouTube you will see some videos right now talking about the next potential investment that will multiply your wealth by 5x in 2 months, my advice to you is be very careful what you invest in. Please check the fundamentals. I made plenty of videos about how to check the fundamentals of a business. You can just check everything, and if it fits your investment criteria. Please don't invest because of FOMO, fear of missing out. Same thing for this one that I don't know at all, big beer eye holding. And I know what people will say about this momentum. They will say this time is different because now AI is here, so you have plenty of AI names that will go up because of the new revenue that will come out of AI, the new profitability that will come out of AI, and this time is different. You have a lot of greed in this market. Look at this. Well said, definitely similar vibes to 2021. We are seeing big pumps in many speculative stocks, and we've also entered into extreme greed territory. Yes, look at this website. You have this chart going into extreme greed. All the charts are into extreme greed. Since April, the market has rebounded so sharply. People are risk on. People have never been so risk on. And the market shifted from being extreme greed in April to now extreme fear in April to now extreme greed in July. And all the tariff threats are not working right now. All the threats from any government are not working. The market just doesn't care. And for big companies, maybe it's a good thing that the market doesn't care, because big companies like the Magnificent Seven are profitable, growing, etc. But in this video today, I want to make a distinction between big profitable companies like Nvidia or Google or Amazon. You don't have maybe you have a little bit of greed, but that's fine because that's big profitable businesses. And you have the other side of the spectrum, the other side of the range, where you have highly speculative stocks that are not making any profits whatsoever and that are doubling in value, tripling in their stock price. You have this phenomenon. Let me scroll down a little bit what they say. People are arguing there is a bubble. Apparently, this is the index for SPACs. If you don't know what a SPAC is, you will have plenty of videos in 2021 that will talk about SPACs. And they will tell you that it was a massive bubble in 2021. And apparently, they are back. So recent companies, IPOs that are going to the public through a specific agreement called a SPAC. And most of the time, this is a very leveraged, speculative company behind the SPAC. And now, since April, everything is back. Everything is back, full mode. You have new IPOs, unprofitable companies, new companies with young business models and plenty of capital flowing in. So the Fear and Greed Index is a good indicator to see where we are in the cycle. And I know some people don't like it. For example, some people don't like it because it's based on CNN. Some people said it's bad because of all the economic terms behind it. I think it's a pretty good way to see where we are in this cycle. And most of the time, I think it's right. If you look at April, we were at extreme fear territory. It was a wonderful time to buy. And now everything has rebounded and we are at extreme greed territory. So we are not at a perfectly good time to buy. Are we at a very good moment to sell? Depends on what you own. Depends on what you own. Some people share their portfolio on this channel and say, okay, is this good? Should I buy more? Should I sell this? It depends on your portfolio. And in this video, I will give you some tips so that you don't fall into the traps of FOMO, but you don't sell out of your portfolio because you can hedge. Here is another tweet that I saw. Cathy Wood says Palantir can reach $1,500. I'm somehow getting deja vu here. From Arya, Quality Investing with Arya. Please, he has a YouTube channel. You can subscribe to his YouTube channel. Great investing channel to follow. And here we go. Cathy Wood going to TV, CNBC to pitch their stock. Very well. And if you look back at history in 2021, Cathy Wood said the same thing about other companies, including Tesla, that could reach $3,000. Okay, so this is a deja vu. I can say it with a French accent. This is a deja vu. And people are, I don't know why, forgetting this. People start to value companies right now. I'm talking about speculative companies, not the big companies. People start to value speculative companies the bad way. And I'm saying with very good confidence it will end badly for all of these retail investors that are trapped into this FOMO and they want to get exposure to the next big thing. So maybe it will be Palantir, maybe it will be Robinhood. Still, these two businesses have great business models. So maybe this video is not for these kind of businesses. I mean, Palantir, great business model. Robinhood, same thing. You have a clear revolution. So this is a proven business model that can have a lot of profit in the future. But you have other speculative companies, the GameStops of the world, the AMCs of the world, these highly speculative companies with a very small market cap that are doubling in size, tripling in size. I'm making this video today for these kind of speculative investments. Please don't put comments below saying you don't understand Palantir, Robinhood. I understand them. They are great business models. This is not the kind of investing we do on this channel, but I'm not talking about these companies. I'm talking about companies that have no track record. I'm talking about companies that have no profits whatsoever. Only speculation, only hype. People are pumping the stock price. You have plenty of YouTube videos, maybe Twitter threads. Maybe people go on CNBC to pitch these investment ideas. And maybe you think Cathie Wood is a good investor. I would say be very careful. You can track the performance of her fund, ARK Innovation ETF, that is now going at a very good performance year to date. If you look at the performance since 2021, let me put the website in English so you understand better. Here we go. In 2020, Cathie Wood was named female Warren Buffett, and all their picks went up and to the right. You have Roku, you have Teladoc, you have Tesla, you have plenty of companies that went up and up and up. And now when it was easy. We had 0% interest rates. It was like fantasy land. And now interest rates are high. The business world is a little bit more difficult because it's very hard to get some leverage now. Harder. All their stocks are down. And people only look at the year-to-date performance, I'm afraid. People don't have the incentive to look at the long-term view, even for the past 5 years, right? The stock, if you had invested in Cathie Wood and followed her in their picks, you would have lost a lot of money. But people forget, so I'm making this video for people that are forgetting. Next tweet for you. Crypto. Crypto is another leg of optimism in this market. People are getting a little bit euphoric in the crypto market, and I want to make a distinction here. I don't follow the crypto market that much, but I follow what is happening with Bitcoin. And Bitcoin is the flagship for crypto. So I can understand why the price is going up. You have a few things that are happening. But you have other cryptocurrencies like Dogecoin that creates very little value to the world. And now Dogecoin has joined the party. Let me, dogecoininvesting.com. Let me show you the chart for Dogecoin. Okay, very well. It's up and to the right recently, but it is not the first time you have this kind of cyclicality. In 2021, we entered craziness territory. It went back down. And then when Trump became a president with Elon Musk, you had a lot of talks about Dogecoin. So it went up massively, went down massively. And now people who don't want to miss out on this opportunity and they want to bet on Elon Musk right now and the Dogecoin. Yes, be careful. We've seen this scenario happen. If you had invested during the hype of the Dogecoin in 2021, you would have not made any money compared if you had invested in the simple ETF like the S&P 500. So be very careful. This is, the Dogecoin entering the party shows that we are already late to the party. If everything is pumping, all the speculative assets are getting up in price. You have Dogecoin joining. You will have GameStop. You will have AMC. You will have BlackBerry. That everybody will join the party. That's signs of a top, actually. We've seen this scenario in several instances. When you have these clear signs, that's maybe a sign of a top. But anything can happen. As long as you have liquidity in the market, it can go up for weeks and weeks and weeks and months and months and months. So this is not a video showing you the top. This is a video advising what people can do to protect their wealth. The goal of this YouTube channel is not to be as rich as possible, as quickly as possible. You don't have get rich quick schemes here. This is a channel to build your wealth for the long-term investing the Warren Buffett way. So I will completely sidestep everything that is happening with cryptocurrencies. Completely sidestep what is happening with speculative assets like this, speculative companies that have never produced any earnings, young IPOs that are very unprofitable with no track record of a proven business model. The goal is not to have the FOMO, because some people watching this video will want to join the train, the wagon, and betting 1% of their portfolio, 5% of their portfolio, 10% of their portfolio, and then a little bit more in this market towards the speculative assets. Please be careful. I've made plenty of videos about fundamental investing. You can only invest in companies that are profitable, and it will be a very good investment. Next thing I want to share with you is something from QCAP. Looking back at this video of Chamath from 2 years ago is so amazing. I want to be an instrument like Berkshire for the retail investors to help them close the inequality gap for themselves. Yes, you've helped them so much, sir. All the investment he pitched went bad. Chamath Palihapitiya, if you don't know who he is investor, quite famous. He was also named the next Warren Buffett, self-proclaimed Warren Buffett, and the track record is not that great. Plenty of lying to their investors, and if you had followed a guru like this, you would have lost a lot of money. And this is also why I want to shy away from on this channel. The goal is not to be a guru to copy my picks. The goal is to give you all the tools so that you can select your own companies. This is also what we do on my coaching program. I just give them all the tools so that they can learn how to fish. And you can backtest all the investment performance here. All the picks from Chamath went south. And now they are getting trendy again. My strong opinion is they will go south again. Maybe not now, but let's see in 5 years. Let's see in 5 years what the performance will look like. Apparently, Open is a company that is going up right now. Opendoor. I have very limited knowledge about this company, but what I see are the charts. What I can see is now it's getting trendy. People are showing the KPIs. People are showing the number of customers, etc. I see the numbers and I don't like what I see, so it's not an investment for me. I can show you what is happening for Opendoor on a fundamental basis, not hype basis. It's a company with a market cap of $1 billion. It's not that small actually. And what do? Real estate platform. Okay. And look at the performance. The revenue is trending down apparently. The net income is non-existent. The company has never been profitable. About the free cash flow, it depends on the year. But they have used their cash flows to reduce the debt, so that's good news. And now apparently you have some good news. This is not a video that will tell you what will happen. You have plenty of other videos on YouTube that will tell you what is happening right now with Open. But I see some hype around this one. So I would say be very, very careful. Either it's a 10x or it's a 0 and you lose half your money or 100% of your money. So be very careful what you invest in. I'm not telling you this is a bad investment at all because I've done limited research on this one. I'm telling you to be careful, to do your own research, right? To not blindly follow YouTubers, people on Twitter, people on anywhere on the world, on TV. Because now, if we are talking broadly about this market, we are at an expensive territory. Here we go. You have the PE ratio of the S&P 500 for the past 20 years, for the past 10 years, and we are at a PE ratio of 30. Quite expensive if you look at the relative terms. The last time we were at such expensive territories were at 2020, 2021, and we had a shock in this market, a war in Europe, and higher interest rates, and valuation went down accordingly. Now, what will be the next shock? And some people will comment on this video saying, you don't understand, Christophe, the PE ratio is high because this time is different, because we have AI right now that will get us some productivity gains, new margin expansion. It will be great for the future, and this time is different. Yes, I agree with you. And during 2020, 2021, this time was also different. You have COVID, you have the great pandemic, you had work from home environment, software companies, you have a big productivity gains. People are now called Zoomers. It's the Zoom generation. The world changed in 2020. So there is no going back to going to work every day. Now it's a digital world. So this time was different, but still valuation came down to reality. Another thing that we can point out is now we are at a PE ratio of 30. It can go up to a PE ratio of 39, like we had in December 2020, to have a shock. So maybe we are at the first leg of this rally. Okay, very well. Yes, so we were at expensive territory during all 2021, and then valuation came back down. Let me check my notes, and that will be it for today. People are now impatient. They want returns very fast. They want to be invested in the next big thing. It was Grab a couple of months ago. Maybe after this it was Oscar Health. I've seen plenty of analysis about this company that were extremely wrong. So be very careful in your analysis. Maybe it will be something else. Robo-taxis in the future. Now, a couple of months ago, you had a lot of hype regarding robots, and people expected fully autonomous robots at the end of 2025. Seems like it will take a couple of years to achieve this status. Things are going fast in this market. And you watching this video may be a victim of FOMO because things are going fast. You don't want to miss out on this opportunity, because it's maybe a easy double, a easy triple, and you will see all your friends getting richer than you. The goal is not to make as much money as possible in the shortest amount of time. The goal is to, one, protect wealth, and two, outperform the market in the long term. And in 2021, we've seen this scenario where you saw all your neighbors getting richer than you. But from a personal experience, it went well. You don't have to chase the trends. If you invest in good companies available at a good price, you will outperform in the long term. This is also what I say to my clients in my coaching program. By the way, if you want me to help you outperform the market, I have a coaching program. You have a link in the description below to book a call with me or to find more information about the coaching program. You will have a short video that will explain everything, how everything works, and you can book a call with me directly. I have no sales team. It's only me and you. And we can talk about your situation to see if we are a good fit to join us. And I only work with serious people. So if you invest in crypto, be careful. If your whole portfolio is crypto, be careful. This is only for stock pickers. To invest in quality companies at a fair price to outperform the market in the long term. So if this is you and you want some help, we can work directly to improve your performance. So what are my notes? People are impatient in this market. People are chasing the next big thing. People don't want to miss out. People are bored. Now the S&P 500 is up on the year like 7 or 8%. People want more than this. Like, people are greedy. And I showed you the stat of extreme greed right now. People want more. In April, people were panicking because of tariffs. Now nobody cares about tariffs. The president has lost all credibility because of many tweets, many things. People don't care. Bad news is good news. Good news is good news. Everything is good news. The market is going up. Everybody is pumping. And the crypto market is agreeing with everybody. People expect the Fed to cut interest rates at the remaining part of 2025. That's a possibility, not a certitude. It's not for sure. What if, in the coming months, inflation goes up again from 3% to 4%? That will force the Fed to maybe not cut rates, but to have rates stable or increase the interest rates. What will be the performance of all the SPACs in this scenario? That's a big question mark. And if your portfolio is not prepared for this scenario, good luck. This is also what we discuss on our group calls on my coaching program. What are all the scenarios that can happen and how can your portfolio benefit for each scenario? Not to be a permabull every time, to be risk on, but to hedge. If you have a great bull market, your portfolio does fine. But if you have a bear market like in 2022, you are okay. You will not have your performance destroyed in 2022. Like Cathy Wood and ARK, I showed you the stat, in 2022 that went south and never recovered. That's the worst thing that can happen to your portfolio. You ride away when things are trendy and hot, and then you have a crash and you never recover for 5 years. Mentally, it's horrible. The goal is to be reasonable with your performance, with your assumptions. It will be very hard to make 50% per year every year, especially if you're not a full-time investor. It will be very hard, like impossible to do it, but to have reasonable expectations to beat the market over the long term. Let me check my notes. I don't want to waste your time. On my personal view, people were asking about this, what I will do, and people said if I was to invest in other speculative companies, will you invest in Oscar Health? Will you invest in the next big thing? My answer is no, because I only invest in clearly profitable companies with a proven business model that have been very rewarding to their shareholders. And I'm afraid that all these speculative assets are not like this. They raise cash because they dilute the shareholders, and I don't like this. Or most of the speculative companies are not profitable, so that's out of my investment criteria. That's out of my watch list, let's say it this way. So I will play defensive. For example, I bought MSCI recently, a defensive play. If we enter the biggest bubble of all time because of a president that is aggressive and risk on, MSCI will benefit. And if we enter a bear market like 2022, MSCI will benefit because 75% of their revenue are recurring. Most of the business model is recurring, high margin. So if we enter a wonderful crash, they will be fine and still profitable. And if we enter the biggest bubble of all time, they will thrive. So it's about risk reward, right? You control your downside while optimizing for the upside. This is what we do. And if you fill your portfolio with companies like this, with attractive risk rewards and a reasonable valuation, you will outperform. This is a simple formula. And if you want me to help you again, you can book a call with me.